Hey guys, so in today's video, we're going to be going over some top high growth stocks, 6 of them to be specific, that have the potential to double, triple your money or more over the long term. Now, I track hundreds of stocks on a daily basis, and these are the top 6 out of every single one that I've looked through that I want to share with you today. Now, if you are serious about investing and you want to truly become a successful investor over time, build your wealth over time, then you want to stick around for this entire video because I'll be sharing some of my thought process, things that I look for in these stocks, and how I've managed to successfully invest in a ton of businesses that have returned me more than double or triple of my capital in such a short period of time. So the first stock that we have here, guys, is Beyond Meat. This is a premier player when it comes to plant-based foods, and they have built a brand that has reached worldwide exposure. They have products from meatballs to sausages to their famous burgers, and they're working on releasing even more products and building on the formula of their existing products as well. Now, Beyond stock has had a rough few months, with the stock hitting nearly $200 per share to now sitting at near $120 per share. So clearly this is an extremely volatile stock. You can see here it's been anywhere from like under $50 to about $200 in the last year. But volatility isn't bad. Volatility can be used to your advantage. And if you're patient in the market, you can take advantage of massive dips like we're seeing in Beyond Meat. Now, we can see here today Beyond is under a $8 billion market cap, and this has me excited because the market that they're going after and the success they've seen thus far justifies them being a much larger market cap company. The global market is a $1.4 trillion industry. The US local market is a $270 billion industry. So if this company can capture even a few percent of the market, that would justify a much higher market cap than $8 billion. Also, look at the growth this company has seen. Over 80% in the last year, over 50% expected the next year in 2021, and I don't think this is going to slow down anytime soon. Now, here's the part that a lot of people miss. Beyond grew massively in 2020 despite a big portion of their business being essentially shut down for a good chunk of the year. They have two parts of their business if you're not familiar. They have the retail side, which is like where you and I can go to Costco and purchase some of their burgers, and they have the food services side where they work with restaurants to provide things like the A&W Beyond Meat burger, for example. The retail business is booming, but the food services business is hurting badly. In the US, we're essentially flat in 2020. Internationally, we dropped 34% year over year. But guess what? If we have a long-term outlook, like I try to teach you guys here on this channel, you realize that these are just short-term issues, and over time, Beyond Meat will become successful again when it comes to restaurants. As these restaurants open back up, as we return more normalcy in the world, as people are more comfortable dining in once again, that part of their business is probably going to be massive once again. I'll say this, with Beyond, it's our first pick and you have to be patient with this one. Probably the most patient out of all the stocks on here, because while the fundamentals look very strong, while the growth is there, there's external factors really pushing this company down, and we don't know how long it's going to last. Could be a year, could be 2 years, could be a bit more than that. So I'm just being patient here. I'm just averaging in consistently, and I think 5-10 years from now we're going to look back and wish we bought in more at these prices. Our next stock up is CRM, Salesforce, which is a stock I recently actually started buying. Salesforce is the fastest growing CRM solution in the world, making it easy for businesses to manage their relationships and opportunities of customers. And the competition is a joke compared to Salesforce. You can't even debate it here. It's clear they are the winners. Here's a chart showing how Salesforce looks today. We're down over 20% from the highs. And guys, you don't really see this sort of dip too often in such a strong business. I am not missing out my opportunity to build this into one of my largest positions. I've absolutely loved the stock for the longest time. I've been waiting for a while to really dabble in, build a position here, and I think we're finally at a good enough value where it makes sense to start buying. Now, the stock today is just at about a $200 billion market cap, but I think this has potential to be a $500+ billion company in the next 4 to 5 years even if I'm being conservative. The growth this company sees is absolutely incredible. Considering its size, it's growing over 20%, and that is normal for the company. And with the recent move that they made, this will help them sustain this growth going forward. If you're not familiar, Salesforce actually recently announced they want to buy out Slack, another one of my investments actually, for a massive $27.7 billion. And while I personally believe this is a good long-term move for both companies, because it's going to give Slack proper resources now to compete with Teams, and it's also going to give Salesforce a great platform to compete with yet another product head-to-head with Microsoft. And I think in the end, this is going to be a major success. It's going to contribute to massive growth for this company as well, because that's just another item now they can tack on there to grow their revenues. But despite all of this, Wall Street is still sort of mixed on this. At this time, there's still a lot of uncertainty. Will this deal actually be successful? Will this deal even close successfully? There's still uncertainty in the air, and that's why Salesforce is experiencing some sort of selling right now. Investors don't like uncertainty, and when they feel a bit uneasy, they sell. That is when you and I, patient long-term investors, individual investors who don't have an agenda to, please or post results for the general public, we can go in there, we can see, okay, this is an opportunity, we're gonna start buying, we're gonna build this into a large position. That's what I'm doing. Let me know in the comments if you're doing that as well. Okay, keeping up with the software theme, guys, next up is another beaten down high growth company, Alteryx. Now, this company is focused on analytics, focusing on simplicity, yet providing value by using AI and data science to help improve a business's efficiency level. Alteryx has had a pretty tough time recently in the last 6 months. The stock has gone from anywhere close to $200 per share to now near $100 per share. And there's lots of value been lost in this stock. The latest news around Alteryx is when they appointed a new CRO, Chief Revenue Officer, which caused a recent drop in the stock. And you may be wondering, scratching your head saying, why would this announcement cause a 10% drop in this stock? Well, that's a great question. Typically, management changes, especially if it's not like CEO or like a chairman or something, doesn't affect the stock all that much. So I did some more digging, and I found the reason. Alteryx actually threw in some updates to their fiscal year 2020 results here as well, and Wall Street didn't like what they saw. In my opinion, the numbers look pretty decent, nothing unexpected, but perhaps what Wall Street wanted to see was a big recovery in Q4, and it doesn't look like that's going to happen. Despite this though, Alteryx is a high growth company, expect to continue the growth in 2021 here, and I think they can actually exceed these expectations as the business continues ramping. Now, just like the first two stocks we talked about, Alteryx is experiencing a lot of short-term struggles, and as a result, investors are selling. But you gotta ask yourself the question, is Alteryx a bad business now? No. Is Alteryx gonna fail in 2021? No, far from it. As we saw, they're expected to grow quite nicely next year. So that leads me to a conclusion here that this is an opportunity. Now here's the price of sales historically for the company, and we can see we're near the lowest levels we've seen in the last couple of years, despite this being a strong growth company with good free cash flows. So yeah guys, we've talked about this company a few times on the channel, and I had to throw it into this list here for January because the value is definitely there. So are you bored of software stocks right now? I want to keep you guys interested. So let's kind of shift over and talk about another company that does have a software aspect to their business, but it's much bigger than that. Amazon is the next company, and this is a big tech play that I think will get even bigger in the next few years. Everyone knows what Amazon does, guys. They have two core businesses. Of course, they have their shopping platform, the e-commerce platform, but they also have AWS, their cloud platform, which is pretty much the profit driver for the company right now. Now, unlike the other companies so far, Amazon hasn't seen much selling, but what the stock has been doing is consolidating over the last 6 months, moving sideways essentially. This is after a big run the stock saw in recent years, so it is justified. Now, despite the sideways movement, guys, the company itself is growing phenomenally. 35% expected to close out 2020 and nearly 20% expected next year. When you're looking at a company this large, these are some mind-blowing numbers. Today, Amazon sits at just under a $1.6 trillion market cap, but this should be a $2 trillion stock when you consider their financials and fundamentals. Based on their financials, based on their growth, based on the prospects of this company, the different ventures that they're really dabbling into, and different parts of the business that are seeing tons of success, this company, in my opinion, should be much bigger. Now, I want to make this clear. I don't think that Amazon is a cheap price right now, I think that you're paying a pretty fair value, closer to the higher end of fair value, in my opinion. However, these big tech companies rarely go on sale, and a fair value is good enough, in my opinion, to build a position in, especially if you've been waiting on the sidelines to buy a big tech company. Now, this is not financial advice, guys, but I'm just going to say this. I think Amazon is a no-brainer investment. I think any amount of capital in the stock will yield results over the next, say, 5 to 10 years, probably even much sooner than that, because the company just continues to innovate and continues to provide value to customers. Okay, now, number 5 on this list, kind of going on the same note here of e-commerce, massive giant tech company, we have Alibaba stock, ticker BABA, and this is one I've owned in the past, but I don't own it currently. There's a lot going on around this company right now. There's a lot going on with Chinese stocks in general. There's even fears that I saw recently that they could be delisting for Alibaba. That just adds a whole nother level of risk. So I don't know, I may buy a little bit of this stock sometime soon if it gets cheap enough. But as of right now, as of recording this video, as of releasing this video, guys, I don't own Alibaba. Now, Alibaba is actually much more than just an e-commerce platform. You can see here, these are all the brands that they currently own, and they range from cloud to entertainment to, other shopping platforms offered. They are a behemoth company. Now, you don't see this very often. Alibaba is down over 25% currently, and this could be a golden buying opportunity. The market cap is just over $600 billion today, which is a small market cap considering the market that they're in, the growth that they're seeing, and the hundreds of millions of users on their platform. Guys, this is a growth monster company, dwarfing its American counterparts, with over 50% growth in 2020 and over 30% expected in 2021. Just think, a company this large is growing at a 40% clip? That's just mind-blowing. So why would the stock be down 25% currently? Adding to this, they are highly profitable. They brought in over $21 billion in net income in 2019. They obviously have the growth. They have the balance sheet, which is phenomenal. And they have massive growing assets compared to a very small amount of liability. Guys, what gives? Why is Alibaba struggling? Well, I kind of hinted at it already. There's a lot of fear around government regulation and just a lot of uncertainty with the future of how this business is going to operate. The way I see Alibaba is that it's purely a political issue right now with the government. If all that gets resolved, Alibaba comes out and says, hey, we apologize for everything. We're going to pay a fine. No monopolistic, that's a tough word to say, behavior is going to happen anymore. We're sorry. Here's the fee. Great. Everything's going to hopefully move on from there. The stock should recover. However, if the government and Alibaba butt heads a lot more, that could pose a big issue. And then you have the US here threatening to delist them as well. That's just adding fuel to the fire. I think we could actually see the stock drop much lower than where we're at right now, which is why I haven't really made a position in the stock currently. Nonetheless, I still wanted to throw this in this video because I wanted you guys to pay close attention to this, throw it on your watch list, and just keep an eye. We may see prices closer to $200 per share, which at that point, I think it's going to be very hard to resist and not buy in. Because Alibaba, the fundamentals, guys, out of this world, no question about it. It's just this other piece of risk that's involved that really has me questioning whether I want to buy this or not. Okay, so now we're finally at number 6 here, but make sure to stick around to the end of this video because I will actually rank my personal preference from, the least favorite stock on this list to my most favorite. Stock number 6 is Splunk, and this is a great data play. What can I say? Data companies are finally showing us some value here in 2021. And I'm taking advantage. Splunk is another data analytics company that focuses on both premises and in the cloud platforms, but their core advantage is their experience with big data analytics, something I expect to see grow massively in the current decade. As more devices start sharing data, services like Splunk become more and more important, and I like the value that I see at current stock prices. Now, the stock has been hit harder than many other companies in this space, down 27% currently, but this has been a company that I've tracked for a long time, and finally, I'm seeing some value here. They've had some issues with growth here in 2020, but that's all hindsight now, and 2021 is expected to pull in over 20% growth once again as the business gets back on track. I spent quite a bit of time understanding this business because it is a pretty complex company. And if you are considering this, I would strongly recommend watching some interviews with their CEO to better understand what this company actually does. But because they're such a massive player with big data, and I think big data is going to get even bigger in the future, this is kind of an interesting play to get exposure to that part of the industry. What I also found is that their customers absolutely love their services and their offerings, and once they purchase it, they're pretty much there for life. It's a very sticky platform, and that is very good to see as an investor. Today, guys, we're at a $26 billion market cap, but I think this company should be a $50 billion market cap in the future with their growth projections that they've listed. Now, the negatives that I see with this company, because there are a few, is that they didn't have a great year in 2020. They're not profitable yet, and they are in a very competitive industry. You know, companies like Datadog, they're really putting pressure here on Splunk. But I think that Splunk really has its place in the industry. It's seen as kind of the premium player in this space. And there are going to be some companies that will not even look at Datadog because they want to go with the best of breed, which I do think here is Splunk. Now, I don't really like making short-term predictions, but I think sometime this year we should see the stock back up above $200 per share. We'll wait and see. It all depends on how their growth actually does play out. But if they are able to deliver 20% plus growth, I think $200 per share is going to be pretty achievable. Okay, so now let me rank these 6 companies from my least favorite to my most favorite in terms of, what am I most likely to invest in? What am I least likely to invest in? Well, coming in at number 6, I think it has to be Alibaba. There's just too much political risk, and it's actually the only stock on here that I do not own currently. Then coming in at number 5, I would probably say it's Amazon, just because it's at a fair value today. There's better opportunities out there for my capital, so Amazon number 5. Number 4, most likely Salesforce. While it is a massive growing company, fairly stable company, again, there are better opportunities for my capital, so number 4, Salesforce. Then number 3, number 2, kind of torn between these two guys. I would have to give it to both Splunk and Alteryx, kind of tied here for number 2, number 3, because I think both these companies have seen a pretty tough 2020 and could see a nice, strong bounce back here in 2021. And that, of course, brings us to number 1, Beyond Meat. That is the company that I am most excited about going forward. I think this will make me the most amount of money out of all the stocks we covered today. And that is why I still continue to buy Beyond Meat despite the stock price absolutely cratering. Anyways, guys, I hope you really found value in this video, and if you did, consider hitting that like button down below, smashing that subscribe button as well with the bell notification. But either way, let me know how you would rank these top 6 stocks in the comments below. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.